Welcome back, my name is Daryl, your host on today's video. Ladies and gentlemen, in the previous video, I have introduced to all of you the most wonderful features of MT6 trading platform, which is now being used by hundreds of thousands of global traders. And today, in this video, I will present to you the fundamental knowledge to help you all have a very clear and specific understanding about terminologies and trading techniques to be more confident to make your dream of financial freedom come true. First of all, we would like to invite you to familiarize yourselves with the four concepts: trends, resistance and support, water drops chart, and candlesticks chart. These concepts are very important because once you understand them, your success rate in trading will improve a lot. And now, let's get started with the first concept, trend. There are three kinds: uptrend, downtrend, and sideways. Let me illustrate them with the charts to help you grasp the concept. Here they are, folks. Uptrend. As the price tends to increase gradually, shown through continuous increase green candlesticks in the candlestick chart, the bullish candle represents the uptrend. Downtrend. In contrast with the uptrend, the downtrend is indicated by red decreasing candlesticks. The symbol of this trend is referred to as a bearish candle. However, the market is not in a constant battle with gravity. During its ups and downs, it has its moments of equilibrium that we refer to as sideways trend. Sideways trend shows the market is balancing between two groups, buy and sell, indicating that they are fluctuating in a certain price range and alternating between the green candlestick, increasing price, and the red candlestick, decreasing price. That is all about trend. Is that clear to you all? Now, let's move to the second concept, which is limitation. We have upper limitation, or resistance, and lower limitation, better known as support. Support and resistance represent the relationship between supply and demand. In the financial market, prices depend on supply and demand. Increasing supply is synonymous with the downward trend. The price will decrease, leading to sell. Increasing demand is synonymous with the upward trend. The price will increase, leading to buy. These words are used in the same meaning. When the demand is increased, the price will increase. While supply increases, prices will decrease. When supply and demand meet equilibrium, prices will be stable. Lower limitation, called support. What is support? Support is the price at which it is said that demand is high enough, so the prices do not fall sharply. When prices drop to support levels, or cheaper, buyers will tend to buy more, and vice versa, sellers will not sell. Upper limitation, called resistance. Resistance is the price at which it is assumed that the sale is enough to keep prices from rising. When prices increase to resistance levels, sellers tend to continue to sell and buyers usually stop. This is an example of support and resistance. They show you the highest and lowest price frame at a specific time. If the market is not fluctuating too much, the price will exceed the price frame. Based on that, traders will have one more strategy to analyze the transaction. The line between resistance and support is called pine line. However, sometimes when the market is strongly fluctuating, the price will strongly increase or decrease and break the limitation. This is known as breakout. After that, the price will return to the previous limitation, or it may create a new limitation. And that's it! Before we go to the next concept, let's sum up what we have just spoken about. They are trend, support and resistance. Next, let's take a look at candles. We will first look at the features of candles. Knowing the features and the meaning of the parts of the candlestick will help us understand the market trends, buying prices and selling prices to help us make accurate predictions for the transaction that we are about to make. There are multiple parts to a candlestick chart. Let me make mention of the parts and then we can dive into more depth with the individual meanings. A candle has four main price indicators. Open, which refers to the opening price. High will be the highest price over a fixed period of time. Low is the lowest price over a fixed period of time. And close, the closing price. You'll also notice that from either end of the candle is a candle wick or shadow. Its purpose is to show us what extent the price went before settling and its final place. When our candlestick is a luscious green, this tells us that the buyers are in control. If our candle is red, it's an indication that the sellers are in control. A short shadow above a bullish candle shows a weak price rejection. And if the wick of the candle were longer, the price rejection would be stronger, resulting in a weak buyer's control. A long wick above a bullish candle is a rejection of higher prices. A long wick on the bottom of a bearish candle is a rejection of lower prices. Next, candlestick classification. In general, candles are divided into three categories with the following names: doji, dragon doji, and gravestone doji. The appearance of each candlestick on the chart will reflect the current market situation. A doji represents indecision in the market, as both buying and selling pressure are in the equilibrium. Dragonfly doji. This tells you there is a rejection of lower prices as buying pressure stepped in and pushed the market higher towards the opening price. Gravestone doji. This tells you there is a rejection of higher prices as selling pressure stepped in and pushed the market lower towards the opening price. Here are some typical candlestick models, which were given funny names to be easier for traders to remember. They are Swim with the Sharks, Kung Fu Trade, and the Pianist. Swim with the Sharks. This is an indication that the market has either a strong continuous uptrend or a strong continuous downtrend. Kung Fu Trade. This can be seen when the market displays a strong trend in either direction, with a sudden change. The Pianist. This indicates a strong fluctuation in the market. In addition to the candlestick chart, we would like to introduce our water drop chart. This is also a chart to help you judge the situation of the Forex market. If you can combine the water drop chart and the candlestick chart, your winning rate will be positive for sure. There are some general features you should know about the water drop chart. This chart contains 60 drops of water, corresponding to 60 minutes in an hour. Green is a buy. Red is a sell. Yellow means that the price is stable, and in this case, the customer's investment will be refunded. Here are some common diagrams of the water drop chart. Follow the trend. It means that all the water drops in one column will be the same color. This is ping pong. The color of the water drop will change every second drop. Thanks for watching our video. We hope that this video provides you with useful information about charts and terms used in the financial sector. They are trend, support and resistance, water drop chart, and candlestick chart. If you have any questions or anything that you'd like to share with us, please don't hesitate to comment here and click on subscribe to follow us for more useful videos. For the next video, we will be talking about factors that influence our trading result in the financial sector and how to win in this Forex market. So, make sure you will not miss out. Goodbye for now.